Today on Your Money, should you rent or buy your own home? We're breaking down the pros and cons of home ownership. We'll explain what an assumable mortgage is and how it can save you thousands of dollars, plus the most expensive home repair projects, and advice from a financial advisor who says you don't need to own your own home to build wealth. It's all coming up right here on Your Money. Welcome to Your Money. I'm your host, Gordon Severson, here to help you save, spend, and invest your money wisely. Today we're talking about home ownership. A lot of people are worried about rising costs and interest rates and wondering, is owning a home still a good idea? So we decided to break down the benefits and the extra costs that come with home ownership. The decision to buy a home is deeply personal. It's not just an investment. It's where you live, where you make your memories. Chris Radcliffe breaks down the pros and cons of owning a home.
Home sales last year dropped to the lowest level in nearly 3 decades after elevated mortgage rates and a lack of homes for sale shut out some buyers. Existing home sales slid 19% in 2023 from the prior year. Financial planner Rolandis Johnson says if you can, yes, you should.
When you talk about the conversation of renting versus buying, you can make it simple or you can get really complex with it. I like to tell my clients, make sure you list out pros and cons. But to boil it all down to one deal, one dish here is, if you have the financial spectrum or wherewithal to gain the asset, as in buying, by all means, go for it.
Renting can get a bad rap, of course, but if you're unsure about where you're going to be for the next 3 years, renting is still smart for multiple reasons.
But renting it isn't a bad thing. I know in society it gets a connotation of being a bad thing. You want to own, you're making someone else rich, all of the different things that they say. But there's a cost that comes with buying and home ownership, and that's one of the cons where in the renting world, all of your maintenance and all of those things are pretty much taken care of, rolled up into one cost. Where in the home, when you own your own home, those maintenance costs can get up there, especially if your insurance is insufficient.
Rojo recommends writing down the pros and cons for your situation, and if it's a good time in your life, start building that wealth and equity.
What is our plan? What's our goal? And so if you're wanting to settle down, raise a family, and all those good things, then we may be looking 15, 20 years down the road. But someone who's on the go every couple of years, time in the market may be an advantage.
And a reminder that the 6 and 7% rates that we are seeing right now are still historically low as compared to the housing boom in the 60s, 70s, and 80s in the American suburbs.
Right. And again, if you're listening to the headlines, they would make you think that interest rates are highest it's ever been in the history of humankind, right? And that's just absolutely not true. They're higher than what they have been, but we're nowhere near the 70s and 80s. So it's still not a bad time to gain the asset if you can.
It's also important to keep in mind that, yes, the interest rates are higher right now than they used to be, but back in the early 80s, interest rates were in the teens. Some homeowners were paying as much as 18% on their mortgages. And if they saw a benefit back then, well, there's definitely a benefit to owning your own home today. Despite those interest rates being around 5, 6, or 7%, depending on your situation, Chloe Thibault spoke with some realtors who say that upfront cost may scare a lot of people away, but they argue there is still a financial benefit to owning your own home if you're focused on long-term growth.
So looks like the 30-year fix is at 7.99%.
For Tyler Hafford at Penobscot Financial Advisors, watching the rise and fall of mortgage rates marks just another day at the office.
It's a far cry from the 3% we saw 2 years ago.
In that short period of time, the market has drastically changed as a result of inflation and a lack of housing stock, to name a couple of factors.
So you have this kind of perfect storm that is now creating a really difficult market to get into and nearly impossible for first-time home buyers who just haven't had the time to accumulate wealth.
Wealth that doesn't go as far as it used to, which is what Hafford says.
The market today is starting to favor the renting side.
you're always going to be paying a mortgage, whether it's your own or someone else's.
Associate broker of Elevate Maine Realty, Melanie Crane, says she thinks there are still lots of reasons for people to buy, like tax benefits and equity. She says she also wants to put current interest rates into perspective.
We'll never see what we saw during COVID, but we also probably won't see what we saw in the 80s, which were where interest rates were, 17, 18%.
The Maine State Housing Authority offers a first home loan program, which helps first-time home buyers with a down payment and lowers their interest rates. Director of Planning and Research, Johnny Kurtzfeld, says deciding whether people should buy or rent is a case-by-case basis.
The kind of cost-benefit analysis is a highly personal one when you're actually thinking about buying a home.
A personal decision made more difficult by the fact that right now there just aren't that many homes to buy, something Maine Housing is trying to address.
It's not just a low-income housing issue. It is across the spectrum. We need more housing to be built for all types of home buyers.
Time is also a big factor when it comes to renting versus buying. Many experts say if you're buying a home, you should plan to stay in that home at least 5 years for the numbers to make sense. But now some experts say you should plan on staying for at least 10 years so you can build up enough equity and value in your home to offset the rising costs of buying a home. The biggest factor when it comes to your monthly mortgage is the price of the home itself. A mortgage on a $500,000 home is a lot bigger than a $200,000 home. The second biggest factor is your interest rate. There are several tricks to get that rate down. Improve your credit score, shop around, and if you're a military family, there are some programs you can apply for. Another trick is to find an assumable mortgage. Rachel Cole explains how it works and how much you can save.
Joe Zielinski just now unpacking.
I'm already looking at little small changes that you can make to your own home that you can't make in an apartment.
Moving into his 3-bed, 2-bath Buckeye home instead of renting in Missouri.
I wasn't able to buy a house in Kansas City. I got an apartment. I was paying over $2,000 a month in rent, but apartment living just isn't for me.
Zielinski able to own by way of an assumption loan.
A loan assumption, basically there are certain loan types that are eligible where a buyer can take over that loan from the seller.
It's 2.9% interest. I had more than enough to get the gap payment and assume a $1,520 a month mortgage.
Real estate agent Mike Mizuko and his team talking about the latest emerging opportunity in the real estate market to tackle affordability, and there's plenty of houses to choose from.
28% of all houses listed on MLS in Arizona have either FHA or VA loans, which are assumable.
Plus, there's perks for both buyers.
And the key benefit there is they get to utilize the same interest rate they have on their existing loan.
And sellers.
This is a way they can offload their loan without getting the impact of a short sale or foreclosure.
Just last month, their team closing 5 transactions with buyers bagging rates as low as 2.55%, numbers we haven't seen in years.
Every single one that we closed was $1,000 a month of savings. The best one we had, that buyer was saving $3,000 a month on their payment. Obviously more of a higher end purchase, but I mean, it adds up real quick.
The loan assumption option allowing people like Joe to move into a house they can make into a home.
It was a game changer because if I would have just bought the house on a conventional loan, it would have cost me an extra $1,200 a month.
One drawback with an assumable mortgage is that you are taking on their mortgage right where they left off, whether they're on year 5 or their mortgage is on year 25. If they have been paying that mortgage for a while, chances are they have built up a lot of equity in that home, and you as the buyer have to pay them that equity up front. You might have to take out a separate loan to cover that equity, depending on how much money you're dealing with. We're going to take a quick break here on Your Money. When we come back, you'll hear from a financial advisor who says it's not always a good idea to buy a home. In many cases, renting is a better way to build wealth. He'll explain why after the break. With how expensive it is these days to own a home, a lot of people are wondering, is it even worth it anymore? Is it better to rent or to buy? And so we're kind of focusing on that with this episode. What are the pros and cons of owning a home versus renting right now?
Well, I would say I've always told my clients that if you want to own a home, you see a home that you like and you can afford it, buy it. That comes with a ton of caveats, right? Because one, can you afford it? That's the first question. Buying a house, you got to put down a down payment. I am a massive proponent of putting 20% down, because if you put 20% down, you do not pay PMI. And paying PMI is private mortgage insurance that basically says the bank is protecting themselves in the event that you can't pay the mortgage. So pros of owning a house, right, is ownership. You're, instead of paying rent to someone else, you're paying into your house. Your house is something that's going to build and accrue equity over time as you pay down the mortgage, and it's forcing yourself to save money. Downside is you are forced to pay that mortgage. If you don't, the bank takes your house away from you. So you must be able to afford it. I think that's a key part, is the affordability piece.
And I know a lot of people are like interested in that equity that you, like you said, every month you're getting a little bit more. At the beginning, it's not as much. You're paying a lot more to the bank, but eventually, you know, you're getting a couple $100 a month in equity. But at the same time, if you own the home, you're responsible for those repairs, and sometimes those can add up.
Yeah, owning a home, you must really, really want to be a homeowner, because as a tenant, you can just call your landlord and say, hey, light's not working, plumbing's not working, toilet's broken, can you come fix it? And it's on them to go and fix it. For you, if you're living in a house that you own, everything is your responsibility, including, as for personal story, we've got a dead tree in our front yard. We are responsible for taking it down, not a landlord. We are responsible financially and must do so in a limited time frame. As the equity side, I think it's really important as you think about owning a home, if it's a short-term or long-term venture. If it's a short-term venture, making the decision to buy a home can be speculative at best, right? Because are you buying at the right interest rates? Are you buying at the right price levels? If it's a long-term venture, if you're going to be in that house for 10, 20, 30 years, it is likely, if you're buying in a relatively good area, that the price is going to appreciate over time, that you're going to pay down your mortgage, and at the end of it, you're going to have equity in a house that you were just, paying into to live in. So I think it really depends on, one, your desire to be a homeowner, two, your longevity, like how long are you going to be living in that home, and can you afford it?
And I think, back to the repair thing too, like I have a personal example of, every month, we might be making a couple $100 in equity. So let's say over the course of a year, it might be, like $4,000 that we get a year. Well, we're going to need a new roof soon, because I think my house is, 15 years old. We had someone kind of look at it after a recent storm, and they said, you maybe got a couple of years left. And I was like, okay, maybe we're gonna have to spend $10,000 on a roof. And he said, no. It's going to be like 30. Yeah, and so I'm like, I'm looking at $4,000 a year in equity I'm gaining, and then eventually a $30,000 bill. At this point, the numbers don't necessarily make sense, but like you said, it's more of a long-term thing if you want to own a home.
Yeah, it's got to be a long-term thinking, right? Because there are going to be bills that you pay, a new refrigerator, a new dishwasher, remodel the kitchen, like put a deck outside. And in the short term, you're paying out a lot of cash, and it's real. I think, again, it's got to be is this a home that I want to live in for a long period of time? Look at it as purely an investment. Then it becomes, again, I'll reiterate, it becomes speculative, because if there is a new roof you have to put on, then that eats into any short-term gains that you may think that you're gaining over that short period of time. But if you think about replacing a roof, if you think about putting a deck on, a remodeling, doing all those things, that adds to the long-term value of that property when you either go to sell it or whatever you choose to do 30 years from now when you've paid off that mortgage.
For sure. I know with another situation was like my brother recently bought his first house, and he was like, oh, what advice do you have? And the first thing I said was, 1 or 2 appliances are going to go down in the first couple weeks. Like every time that I bought a house, and it's like, it's something that like people should budget for. Like if they scrimp and save for that 20% down payment or 5 or 10%, it's like always have that wiggle room, because no matter how good of an inspection you do, there's always a few things that are going to go down.
100%. And what I call it is post-close liquidity. Right, so it's not just scraping up that 20% and then all the different things just so that you can own the house, because like you said, the second you get in there, appliances go down, the washer and dryer need replacing, and you're probably moving into a new house, you're gonna want to put your own sort of twist on it, right? You're gonna wanna, like we moved into our house before we got there, my wife said, we're putting in new carpets. We are painting the entire house, right? So it's more than just the 20% down, it's closing costs. It's making sure that you make the house your own and you've got capital available to that. And to your point, things are going to break. Period. There's no like if, ands, or buts about it. Things are going to break and you're going to have to fix it. So you should build into your budget the ability to save towards what I've seen a lot of like my clients who do this really successfully is that they save, a handful of dollars each month into a kitty that's going to be basically a delayed spending account that's going to go to the house. So we know maybe in the first 6 months, nothing is being fixed, so nothing goes out, but we keep that money there for the next 6 months of that year. Oh shoot, we've got to replace our oven. So now we've got some cash available so that we don't have to be dipping into debt or dipping into emergency fund savings to do something that's necessary.
I think one of the biggest pros of renting that can't be understated is the flexibility that offers. Especially if you're young in your career or you move around a lot, that flexibility of being able to rent and move is just so advantageous for people.
Yeah, buying a house is a long-term thing. It is assuming that you're at the job that you want to be at for a period of time, that the income that you're making now is going to be sustainable and potentially growing over time. When you're renting, on the other side of things is you've got flexibility. You typically sign a 1-year lease, and then after that it's month to month. After that, you've got the ability to leave it with some level of notice to the landlord. If they raise rents on you, say, okay, I'm gone. I'm gonna go somewhere else. And you don't gotta stay there for a very long time. You can move when you want.
I know traditionally, from an investment and a long-term perspective, so many people have said the best investment is to buy a house. It gains equity over time, but there's a growing amount of people that are kind of thinking differently, and I never really thought of it this way, is instead of, if you're buying a $300,000-$400,000 house, you have to save, I have to do the math, but 50, 60, 70, 80 grand. They're like, you know what? I'm going to save that money and put it into the market and get better returns there. And rent. And we're seeing more people that are in their 40s and 50s that have families are renting a home, and they are putting that down payment they would have been putting on a house into the market. That I never really thought of that as an idea until more recently.
Yeah, I think it's, I've got folks that say, I don't invest in the market because all I know is real property, real estate is what I know. I can feel it, touch it, see it. Some folks are the other way. Nope, I trust the market. The market's going to go up. I'm going to invest that money. For me, I don't have a sort of a decision or a viewpoint either way, like definitively. But I do think, if you do not want to be a landlord, if you do not want to be responsible financially for the things that need to be fixed in your home, and you want the flexibility to be able to move, renting and investing that money might be a better choice for you. The one thing I do say is even when you get to, let's say, my 60, 70 years old and I've got a house that has no mortgage on it, I'll still need a place to live. So getting equity out of that house is going to be something that you need to really think about at that time. Is it, am I selling it and downsizing it? Do I want to do that or not? Do I want to give that to my family when I'm gone and have that as an asset for generational wealth? Do I reverse mortgage it so that I take some equity out of it and just get streams of income until I leave this earth? So there's many different, I think, strategies to go about it. I think you just need to have very clear intentions around what you're doing.
You touched on something that I think is so important for people to also remember is it is an investment to buy a home, but it's also a use asset. It's where you live. It's where your memories are made with your kids. So there's value there. It's not a dollar value, but it's a value to your life and to your significant other and your kids. And so if you really value having something that's steady, you can live there for your entire life, not have to worry if a landlord's going to decide, oh, we want to sell the house, you have to move. So that's something to consider as well. It's more than just money.
Yeah, what's the value on stability and those memories, safety? And I don't know how you put a dollar amount on that, but it's really, really valuable to have, like you said, a use asset that then appreciates in value that you can then later on have a decision to extract some value out of it. It's really important to have that mindset solidified for whoever you are in the place of life that you're in, knowing that it could be a 30-year decision.
You also touched on some great options that you have later in life if you own a home. And there's really good value there. You might be losing money in the first couple of years with all the repairs and whatnot. But then when you're, in your late 50s, 60s, 70s, and if you have the house paid off, don't have that monthly expense of a mortgage or rent. And if you're wanting to retire, that's less of a burden on you, and you have those options, reverse mortgage. That's some great flexibility later in life that is very valuable.
Yeah, I always tell my clients, it's you're not trying to win the game today when I'm 45. I'm not trying to win the full game today. It's a long game, and I want to win the game throughout my life. And one option you have when you have built up equity, when you've taken the pain of putting a down payment, paying the bank for a period of time, replacing the dishwasher and refrigerator once or twice over 30 years, seeing interest rates go up and go down and sort of weather all that storm. When you get to the end of it, you've got equity in this house that gives you options. You can, again, you lose that X dollar amount of mortgage payment. And most of my clients, when they retire, they want to retire without a mortgage. And once you lose that, whatever dollar amount that is, that can go into living a more comfortable lifestyle. That can go into giving to any philanthropic endeavors you have, your kids, your grandkids, that type of thing, living life comfortably. And then you have the option to take equity out of the house or keep it in the family. It's your choice. So it's definitely a long game. In my opinion, it must be thought of in that way. It's not a short game to win. It's a long game to play in and win from over a period of time.
So we've discussed a lot of good pros and cons. There's no right answer. You can rent your entire life or own your entire life. It really depends on your own personal situation and your goals.
100%. I would agree with that. It's up to you. Make the decision. Make informed decisions. Speak to family members. Speak to financial advisors. Speak to people who you trust to give you a sense of what might be best for you. But ultimately, it's your decision, and you can't be faulted for making whatever decision you choose to make.
Well, thanks so much, Ryan, for coming in and helping us out.
Thanks, Gordon.
Coming up after the break, we're talking home repairs, why many first-time buyers aren't prepared for the countless projects that come with owning your first home. We'll break down the 10 most expensive repair projects and why many people are deciding to tackle those projects themselves. Stay tuned to Your Money. Welcome back. If you are just joining us here on Your Money, we are breaking down the pros and cons of owning your own home. Is it a better idea to rent or to buy? One of the biggest drawbacks Ryan and I talked about earlier is that if you own your own home, you are responsible for all the repairs and upgrades. And a new study suggests those costs may be higher than you think. According to the home improvement website Angie, formerly Angie's List, 41% of first-time buyers spent more on home repairs in that first year than they had originally planned for. The study suggests younger buyers were even more caught off guard, with buyers under the age of 24 more likely to underestimate the cost of home repairs, with the average home renovation costing around $51,000. Some of the projects that surprised buyers were how much it would cost to paint a few rooms. If you hire a company, that can get expensive. Or if you're painting yourself, it's not just the paint, it's the tape, the plastic to protect your floors, and all the equipment like paintbrushes and rollers. A lot of buyers were also surprised by the cost to replace a few appliances that went bad, and the cost of landscaping. It can be expensive to tear out an old tree or to put in some wood chips or rocks and some nice plants to accent your home. A great way to save money on home repairs is to do it yourself. If you're a DIY master, then you will love owning a home because the projects never end. A new survey suggests more homeowners are tackling these projects themselves to save money. Sarah Wilson has the story.
From food to gas.
Everything costs more right now.
Even inflating prices to repair a home. A homeowner survey done by All Star Home, a remodeling company, reports that an average of $2,900 has been spent on home repairs in 2023. But a different trend was shown among people trying to cut repair costs in half.
So our survey found that 70% of Americans are using social media to help them with those DIY projects.
Content strategist Emily Thornton says repairs like plumbing, painting, and drywall, and pest control are the top repairs many take into their own hands.
At our fingertips, we have access to a lot of videos, guides, etc. So it's no surprise that people are taking on especially some of these smaller projects around their house.
1 in 4 admit they could not afford an emergency home repair right now, but 72% have called experts because 22% say a repair has been made worse when doing it themselves, while a repair expert say inflation hurt them too.
Our cost of doing business has gone up dramatically, which has in turn led to our cost of services having to go up. We're spending more money on our insurance policies, on our vehicles.
Blake Robinson is the owner of Ace Handyman Services in College Station. The impact on the repair industry is what further pushed DIY repairs.
A lot of customers now are more interested in improving their home and investing in the place that they live because it's their most valuable asset.
Whether you choose to DIY your valuable asset or not, asking a professional first will save you more money in the end.
You might be surprised by the projects you can do yourself. My best advice, YouTube. There are so many videos that can help you get started. A few months ago, our dryer stopped working. I watched a few videos, and within an hour, I had that dryer opened up. I figured out the problem, and the part I needed only cost me $20. Not bad for a project that would have cost me a few $100s with a professional. I'm fairly handy, but there are a lot of projects I would never do myself. I'm afraid I might make a mistake and make the problem even worse. The Zebra, an online insurance comparison website, recently broke down the 10 most expensive home repair projects, and many of them I would never do myself. Number 1, foundation repair. According to Zebra, the average project will cost between $450 to $11,000. Number 2 on the list was roof repairs. Fixing a few problem spots will cost you a few $100s, but a full roof replacement will cost you more than $6,500. And I can verify personally that number will likely be even higher depending on where you live. I recently spoke with a roofing company that said these days a full roof replacement could cost you more than $30,000, depending on the size of your roof. Number 3 on their list was repairing or replacing a hot water heater. That project will set you back between $500 and $1,000. Again, I think the final price tag could be even higher if you have a company install that new water heater. They could charge a few $100s just for the installation. Number 4 is termite damage. A treatment will cost you around $500, but the damage could cost more than $7,000. Number 5 was water damage, with the average project costing around $2,300. Some other projects on the list include fixing broken pipes, AC repair, mold removal, electrical issues, and septic system repairs. With all of these projects, it depends on the problem. I know personally replacing a furnace will cost you at least $10,000, which would put that project up at least in the top 5. But don't let these home repair projects scare you away from owning your own home. At the end of the day, for many families, owning your own home is still a great financial decision that will help you build wealth over time. Just be aware of all the pros and cons we mentioned today. If you're buying your first home and you're scrimping and saving to get that down payment together, make sure you have at least a few $1,000s left over so you can cover a few unexpected projects. No matter how new the home is, something always breaks and goes wrong, and you'd hate to have this great new home and no money to maintain it. I'm Gordon Severson, helping you save, spend, and invest your money wisely. We'll see you next time.